Praveer Sinha joins us, CEO and Managing Director with Tata Power. Always a pleasure to connect with them. Good morning, sir. Thank you for joining us. How are things?
Good morning, Nikunj. Always a pleasure to talk to you. And be on the show.
Right, sir. I have 5 brokerage reports who've reacted to your numbers. Some are saying surprise decline in profit. Some are saying renewables drive profitability, but core business is down. Some are saying that execution had slowed down for the quarter gone by. What is the real story? What happened in the last quarter, and what were the factors at play?
So last quarter, like the previous quarters, our core businesses have done very well. Our generation, transmission, distribution, our renewable, all of them have done exceedingly well. And they have been doing very well for last 21 quarters. This is the 21st consecutive quarter in which we have shown growth. And this is on back of excellent performance in each of these areas. And what is important to realize is that earlier there used to be non-core areas in which we used to have better results, something like coal and other businesses. Now it is the core businesses which have started pumping in. And this only proves that we have created very good foundation for all these businesses. The fundamentals are right, and this will only improve going forward. And that's the way we should see. There may be one-off here and there because of various reasons. Like last quarter, we did not have one of the units operating in Trombay because the plant was down. Or we may have one quarter where the solar radiation is low or the wind speed is low. But it is not that the fundamentals are wrong. The fundamentals are very, very strong. And the CAPEX that we have been incurring are started showing results, and more results will come in the coming years. So I think we need to look at it from a long-term perspective. These are infrastructure projects where we are looking at 25-30 years of returns. And I must share with you that whatever we are putting are excellent quality assets, and these will give very, very long-term results and returns for the company.
Expect the sluggishness which has happened because of delay in government spending, maybe a little bit of delay in terms of commissioning of the projects, which for you perhaps is one quarter. But for you is few days, but for markets is one quarter. Do you expect the sluggishness in Q3 to persist in Q4, or this has already started improving?
It has started improving in Q3. Also, we could execute projects. Even in renewable, we have added nearly 865 megawatt in 9 months, which is the highest amongst all the players in the renewable space. Similarly, our projects in transmission and distribution are getting executed. Typically, you would find that this really ramps up in the last quarter because of during monsoon, many of the activities cannot be carried out. And especially in our sector, these require road cutting permissions, or these require large cable laying and large transmission system, which during monsoon period does not get carried. They have all been done from October onwards, and they will all get capitalized in this quarter. So we have done 12,000 crores of CAPEX in the last 9 months, which was the total that we did last year. We expect another about 10,000 crores of CAPEX in this quarter, where works have already been done and they are in the final stages of commissioning. So I think we are very clear that whatever we are investing will give us very good results and yields in the coming quarters.
The real delta for Tata Power, apart from the distribution business, the traditional business, will come from your RE business. To just talk about this point for our viewers, that is one business where you are present in solar modules, you've got solar commissioning, and you are expanding a lot there. And just for the benefit of our viewers, I may want to remind everyone that Tata Power few quarters ago did announce that they will not be going ahead with thermal capex. Could you if I could encourage you to tell a bit about the RE business, what growth that has witnessed for the quarter gone by, and going forward, at what rate that business will grow.
So I think if you see on standalone basis each of these businesses, in the solar manufacturing, and you know that we have commissioned the 4 gigawatt plant. The 4 gigawatt module is operating at full capacity. The 2 gigawatt cell line got commissioned in month of November, and another 2 have got commissioned in the month of January. So if we see in the last quarter, our revenue from the manufacturing plant was 1,300 crores. EBITDA was 226 and PAT was 112 crores. Again, you see across the industry and people who have been in this specific manufacturing business, our results are the best amongst all of them. For the first 9 months, we've done 2.4 gigawatt of supplies and manufacturing. Revenue has been nearly 3,831 crores. And mind you, this is only for the module line. Once the cell line also kicks in, this will increase tremendously in the coming year. And also our EBITDA for 9 months has been 471 crores and PAT of 231. So I think we've done exceedingly well in a very short period of time. The ramp up that we have been able to do and stabilize the manufacturing, I think it's a record not only in the country but a record globally also. Similarly, you see Rooftop. In just 1 quarter, for the first time, we crossed 500 crores. And again, very good margins are there in this. We have also seen in the 9 months, we've done nearly 1,300 crores of 1,345 crores of revenue, which is 22% increase on year basis. And I think what is important is that we have created the necessary infrastructure, the supply chain, the whole ecosystem of channel partners, market pull through various initiatives, advertisements, which today will help us to become not only the biggest player in the rooftop space, but also one of the biggest champions of implementing the PM Surya Ghar program in the country. In fact, we have signed MOUs and agreements with 5 states to promote rooftop solar, starting from Tamil Nadu, Assam, Odisha, UP, and Rajasthan. So I think we are the preferred partner in each of these states for driving this initiative.
Okay. I'll talk about the solar business, and some would argue that, okay, this business is growing, but it is also protected because of the tariffs, which is that government, in a sense, is protecting the Indian industry by ensuring that the China, products do not come here. The sugar rush which currently this sector is benefiting from, it is nothing else but a regulatory or a tariff protection. And this may not last long. Would you like to respond to that, sir?
I think every country has their own way of supporting industry, whether it is China or US or any other country. All of them have trade barriers, and all of them also promote industry by giving them either the PLI or the IRA or the capital subsidy and the interest subsidy that is being provided. So, in fact, if you see the type of support and subsidy that is being provided in other countries, the one that we get in India is possibly one of the lowest, and we still compete and produce quality products which are as good as anywhere else in the world. So I think we need to take it in light of what others are doing and how they are protecting and promoting the local industry. And I think what is being done is correct for the Indian industry to grow and come to aid, because unless we create that sort of scale and create that sort of demand locally, it would be very difficult, because it's an unequal match or unequal playing field that otherwise will be there. So I think what we have seen in India is to ensure that we create the necessary, because if we have to set up 50 gigawatt of renewable every year, we need to have a very robust supply chain, and we cannot be taken for a ride from any other country.
Good morning, Mr. Sinha. This is Shrishti also joining in. Since in the union budget, we have seen the allocation for the solar power and the whole energy theme going up by 80%. We already talked about that. But the other delta for you could be the nuclear power space. There too, the government has gone ahead and given the allocation, not just in terms of getting the companies on board, but also shifted focus on the R&D as well. Help us understand that how is Tata Power looking at this particular space and how big an opportunity lies for you in the times ahead?
So, as everyone is aware that nuclear power was a protected area and only public sector and government bodies could set up. And hence, the technology development that was required did not get catered to. We are very happy that Government of India has taken the initiative to allow private sector. This will ensure that more and more of nuclear power comes in, and nuclear power is classified as clean power. And I think if we have to really transition fast to clean energy solutions, then the nuclear power will play a very, very important role in this space. We have been working on this for last 2 years. It is a very, very daunting task to set up nuclear power plants, and that's why it's important for large companies to get into the nuclear space. We feel that apart from the technology which is available in the country for nuclear power, there's also opportunity for small modular reactor technologies from other countries where there's already huge amount of research work that is going on. We will have to take some of those technologies and customize it to Indian requirements, and also look at not only small modular but also micro reactors if we can set up. So I think you will see a huge amount of nuclear power plants coming up in next 2 decades, and Tata Power will play a very, very important role in that.
So if for our viewers, they want to understand that in 2027, what would Tata Power look like? How much business will come or growth will come from transmission? How much will come from generation? How much will come from international? How much growth you also perceive which could come from the new initiatives which you're planning to do? Because Tata Power now, sir, is present in range of businesses, and all these businesses have a different cycle. Some are regulated, some are not regulated, some are centered around innovation, but everything in a sense is centered around electricity and energy demand. So a lot will change. I mean, these are interesting, exciting, and perhaps challenging times.
So typically right now we'll have in next 1 or 2 years about 30% coming from renewable, 30% from T&D, and 30% from our conventional business. 10% of course will come from the non-core businesses that we have. But going forward, I think renewable will become about 40%. Our conventional will become 20%, and T&D will continue to be 30%. So that's the type of mix that we will have. From nearly 90% regulated and 10% market driven, will possibly become, will gradually shift to 70-30 of regulated and 30 of non-regulated and market driven. And eventually it will become about 60-40. So I think we are looking for a very good mix of regulated, because that gives us a very committed cash flow and a committed returns, while the market-driven businesses will provide the upside also, but it has also the challenge of competition. And that's where I think it's very important to have a good balance between regulated and non-regulated business.
So good having you on the show today. Thank you for your time.
Thank you. Thank you very much.
The Tata Power in trade for you, holding up 2.5% as we speak right now. But let's welcome on board C.K. Venkatraman, MD at Titan & Company, and let's talk about how